What's up, everybody? I'm pissed off at myself for not executing my trade in Chipotle yesterday. Trying to get in at a certain price, and I ended up missing a big move today. It happens. But let me go to the trade real quick. Show you what I missed, because this is important. I remember I had the down signal yesterday, and I was looking at the 1580. The 1580 put. And I was trying to get in at, I believe 200. This contract I was trying to get in at $200. And it didn't take my bid. So instead of me basically maybe going to a lower strike, I said that I was going to get in this morning, and I didn't get in this morning. The move had already occurred pre-market. I probably could have got in at a lower strike, but once the train starts moving, it's the reward risk ratio is not in your favor. So this is a trade that I missed. So you can consider that to be an error. That's an error right there. You see the sell signal. And the sad thing is, this trade would have took my account into the green for the week, because I'm still in Apple, which is a loser right now, and I'm still in PLTR, which is also a loser. So this one trade would have made up for those losses and some. Let's look at it. This is the 1580 contract. Here it's saying that the closing price was 179, but there's no way it could have been 170. It's saying it was somebody got in at 179, but it wouldn't allow me to get in at $200. Well, let's just say hypothetically I would have raised my bid to maybe 210. It went as high as $1,300 today. Right now it's at $786. So even close to the close, I'm still up a few $100 if I would have been in this trade. The Google trade also. The Google trade, I looked at it pre-market, and Google also was trading down, but I could have got in Google in the morning. I looked at the contract this morning around 10 o'clock, and let's see, the put contract that I was looking at, I think it's this 2530. No, not that. It's the 2520. Or maybe it's the 2500. There was a contract that I was looking at that I could have got in. Let me go back. Okay, this is not sure which contract this is. Hold up. Yeah, this is the 25.20 put. Within that first half an hour at 10 o'clock, I could have gotten it at 135. Right now it's at $400, but it hit a high of 760. So even still, I would have still been in the money. Apple went down slightly, not down strong enough for my strike. I'm in the 145 put, so that's a loser. PLTR, it's a loser. I'm in the 23 strike. It's at 21.42. It tried to go up and went as high as 22.06, but it didn't go up strong enough, and it's still not really holding a bid. It sold off. So based on this price action, that's likely to be a loser too. Let's see if I have any trades today. That's why it's so important to take each and every trade, especially with my trading system, because you don't know which one is going to give you that home run, or which one is going to, make your losses disappear. We dealing in probability, so we dealing in the unknown, and by you dealing with the unknown, you need to focus on where you're going to be in the long run. This situation, this is my third trade in this 100 trade series. So basically, any individual trade is insignificant. And this is why I'm doing 100 trades with you guys, so you could see that you need to focus on where you're going to be after a certain number of trades. And typically I'm using 100 trades to measure what my trading system is about. Now, when you start picking and choosing certain trades over the other, then you're adding a variable into your system, which may affect your results. In the case of the Google and the CMG, by me being too concerned about getting in at a certain price, it's a lost opportunity. You know what I mean? It's a missed opportunity for me, because by me haggling over whether I get in at $200 or not, which I could have just bought the lower strike, the move occurred and it would have made me a winner. It was actually a home run trade, because I could have set my getting in at $180. I could have set my sell price 4 times that. The contract hit $1,300, and it could have been a home run trade. So it was just something to learn from, and pretty much needing to make a vow to never, keep those mistakes to a minimum, because it's costly. The Baba and this Baba and Badu trade, I don't see a line up. What I've learned, that the key to success in trading is you have to have a greater fear of losing out on a big move. Your fear of losing out on a big move has to be greater than your fear of losing. And I'm going to say that again. Your fear of losing out on a big move has to be greater than your fear of losing on any individual trade. So the name of the game is survival. You have to survive through the periods in which your system is giving you a loss or giving you losses. And you have to survive, believe it or not, when you are having a period of winners, because that can also could fuel overconfidence and greed, and you start taking trades that you shouldn't be in. So I'm not seeing any trades that I'm comfortable with taking for tomorrow's expiration. So we'll see what Apple does, which I'm already, anything can happen in the market, but I just don't believe that Apple's going to go down strong enough to make me a winner. It's at 148.44. I don't think it's going to go down $3 to take my strike, the 145, to make that in the money. That's a 2% move. It could happen, but I doubt it. PLTR as well. You know, that 23 strike, that's a damn near 7% move from where it is. It could happen, but I doubt it. So I'm already counting that as a loser too. But just think, had I been in my Google and had I been into the CMG, I really wouldn't even be talking about those two. It wouldn't even have mattered. So tomorrow when I stream, it'll be based on the weekly signals. I'll be looking at my weekly scans. It looks like I'll be getting one on Google, Microsoft, PLTR again, TLT. We'll see if these remain. We'll see what happens. See what happens tomorrow. Thanks for listening.